Thanks for tuning into India Market Close. I'm your host Niraj Shah, and let's take stock of what's happening in the markets currently. Well, it's a flattish day, but marked by an uptick in volatility. So India VIX intraday surged even higher. And if you just look at what it's done, at 24, maybe not up 5-6%, but still substantially higher in trade today. So volatility is certainly high in the session. Mid caps and small caps, and the market breadth should come up on your screen, down about 0.8%. Typically, when VIX moves up, in some sense, there's some bit of a corrective move that does come in per se, and that is we are seeing here, and which is where the market breadth, which has been adverse for better part of the trading day, has looked wobbly. So like I said, it worsened immediately post-open, and I think it stayed this way for a better part of the trading day, which is why you see just 560 advances to 1430 declines. So large caps are holding out, mid caps are not able to do that. Bring up the heat map, and at least let's start with the large caps. Then Harsh will mark the broader end of the spectrum. Even Stevens, so if you look at this chart, it won't look anything untoward. There's weakness in Adani Ports today, BPCL, Coal India. No specific reason for a clutch of these to go the way they have. Reliance is down about 1/3%. NTPC, Power Grid, so economy-facing stocks have come off a little bit. No specific reasons for a clutch of them, but it's look weak. On the flip side, Divi's up another 2.7% after the rollicking move yesterday, so that's done okay. Some bit of defensive bent when you see the likes of HDFC Life or a Grasim or SB Life. So insurance companies, life insurance companies have certainly done well. Asian Paints and Britannia have done well. So you clearly see a bit of a defensive bent here versus some of the aggression being sold into in the session today. And Harsh, that is very evident in the way the broader end has behaved today, because while there are gainers, yes, but the larger canvas is filled with red, and a clutch of stocks have seen some serious profit booking today.
Well, absolutely, Niraj, especially in that defense basket, and we'll talk about that a little bit more as we progress through the show. But first off, I'll mark out some stocks which have been in focus. Let's pull up something like a Sumitomo Chemicals, very strong set of numbers. EBITDA up nearly 70% plus on a year-on-year basis. Very, very strong numbers, 50% plus on PAT as well. Let's pull up something like a Life Insurance Corporation. Again, a good set of numbers, good commentary coming through. In fact, at the start of the day, it was in the green, but it's cooled off since, currently at 1.3% lower. Not bad in terms of the numbers, though. Let's pull up something like an HLE Glasscoat, an SH Kelkar. Again, very strong numbers from something like an SH Kelkar. But nonetheless, the stock really not doing much in trade today. Let's pull up something like an LG Industries. Again, the stock doing fairly poorly in trade after a fairly tough set of numbers in Q4. Let's pull up something like a Vishnu Prakash R Pungalia. That one too has done very well in terms of its overall numbers for Q4. And that's why that one in focus as well, up 5% almost as we speak. GMDC, if we can pull that one up, even something like an EMIL, an Electronic Smart. We spoke with the management earlier today. GMDC, the numbers were poor, and that's reflecting on the stock price, as well as EMIL. The numbers were actually quite decent, and the stock price also pretty much there. Natco Pharma was the other one as well, which had done fairly well, and the numbers reflecting that, in fact, was up a solid 3-4% plus in early trade, has now cooled off just about 1% in the green as we speak. So far and few in terms of just the results. But let me also quickly mark out some stocks on the back of certain bulk and block deals which were scheduled to happen and happened early today. Timken India is up 5% odd on the back of that. Concord Bio also in focus, 2.5% lower in trade on the back of bulk and block deals. So several stocks. Last off, I want to mark out some defense names. Something like a BEL, Cochin Shipyard, Garden Reach. We can keep them coming, all of them down nearly 3% each. A HAL, a Mazgon Dock, all of which are facing some amount of pressure. Defense stocks seeing some of that. Bharat Dynamics also seeing some pressure in trade today. But that's that. Let's chat more about the markets, and we have our guests. Let me welcome them on board. We have Vaishali Parekh from Prabhudas Leeladhar and Dharmesh Kant from Chola Securities to talk to us about how markets are progressing in their view. Vaishali, second consecutive day where we've seen some amount of weakness. Of course, maybe not second full day of trade where we've seen weakness. We saw better part of strength yesterday, but we've seen weakness at the latter half of yesterday and pretty much all of today. What's the sense like on technicals?
Hi, very good afternoon, all of you. So yes, our market has been now showing some signs of nervousness. So I would say what is deciding till yesterday, as you said, that yes, the trend was pretty much intact. So currently we are at the make or break levels. If 22,900 levels break decisively, and if we sustain below that, we would be seeing some more profit booking coming in. Whereas as long as 22,900 levels are held on and Bank Nifty holding on with the final support of 48,800, I think it could turn out to be a stock specific to a sideways market.
Okay, and Vaishali, anything on the Nifty Bank that you are seeing? Apologies if I missed that.
So yes, that's what I just mentioned, that Bank Nifty is in an uptrend. Only if we break the 48,800 levels in the near term, that would bring in some more profit booking, perhaps even towards 48,500 or so. So for now, Bank Nifty is still much better than overall Nifty index.
And Vaishali, how are you seeing broader markets? Because those especially are seeing some amount of pressure, the mid and the small cap end of the market.
Yes, I mean, they have been actually quite a lackluster movement over there. And right now we are seeing that, yes, there is quite a bit of profit booking emerging. So I would say right now it's a ideal situation would be to sit partially on cash and wait for a clarity in the further trend.
Okay, understood. Got it. Dharmesh, your views, what exactly is at play? Is this just a little bit of consolidation that we are seeing in terms of markets as well as valuations post the Q4 numbers, a bit of a pause?
Yeah, definitely. I think it's a bit of a pause in consolidation. Time-wise consolidation is happening in the market as we get nearer to the election results. Nothing wrong with the only worry for this market and for me is there is nothing negative in the market as of now. The only thing which can go wrong is the desired election verdict. Other than that, we don't see anything going wrong. The numbers were excellent. I did an aggregate of 490 companies. The PAT growth was 30%. And it was primarily propelled partly by the volume growth and partly by the operating margin efficiencies which came into play. So net things are looking fine. And some trading portfolio reshuffling is happening in the market. So one has to, tread through 3-4 days of session mode.
Yeah, that could, and you could argue that in some sense this seems like a reshuffle, but also today seems to be a bit of a bend towards the defensives ever so slightly. I don't know if the higher VIX is doing that or something else, but it's certainly looking like that. Vaishali, in light of that, what are the stock recommendations for this afternoon?
So I would look at, as everyone is focusing more on insurance stocks. So one is SBI Life, which I think has not participated. And today we've been seeing that HDFC Life, SBI Life, they both are getting into some round of momentum and technically quite well placed. So I would say with 1400 as stop loss, look for a trading target of 1500 to start with. And the other stock to my liking is Sun TV. We saw a good run up coming in, and I think there is still scope for further upside. So I would say this could be a buy with stop loss of 650 for a target of 710.
Okay, let's just pull up those ideas and the stop loss and the target levels most importantly. One of them is Sun TV. It's had some traction today. I believe Sun TV was just active today. The other one is a life insurance play, and the life insurance play doesn't quite surprise me. But Harsh, it's interesting that the life insurance plays have done what they've done today in particular. Aside of LIC, anything else that could have triggered this but for defensive buying?
The belief is that some commentary coming in from LIC with regard to composite license opens a new window for life insurers as well. Also, life insurance in general hasn't done very, very well. You look at an HDFC Life, we had a note coming through earlier late last week, talking about how valuations were now starting to look attractive. And probably that's why the focus has come back and reshuffled back to life insurance. That's possibly the likelihood. But outside of that, no real reason there, Niraj, for why life insurance should be up and away.
Yeah, well, if you look at wealth creation or wealth destruction, if you will, I mean, the PSU life insurers or general life insurers largely haven't gone anywhere. Even LIC in the last few days may have done okay, but for the longest time has been languishing, right? And I think since 2017, if you see HDFC Life, I mean, that's maybe a 6-year period wherein the gains haven't been material. They've been good, but nothing too dramatic. So, yeah. But the composite license piece that you spoke about, it's interesting. Just a quick follow-up. What happens as a result of that?
So, it allows or it enables life insurers to start to do health insurance and general insurance.
Always been in the works, right?
Always been in the works, but there's obviously a little more chatter given the fact that the chairman has spoken about it. LIC's chairman has spoken about it, and therefore there's been a bit of more chatter on it. The other piece also that could be triggering this is that a lot of life insurers hold a lot of government bonds and government securities. Now, while banks were in focus for the longest time with regard to
the MTM gains.
Yes, the MTM gains. Likely the other beneficiary clearly is going to be life insurers from all of this, because they do hold a lot of bonds. And LIC themselves have come out and spoken about how they've upped the bond purchases that they've done in this year. And therefore it leaves a large window in terms of upside potential from the investments that they carry at carrying value.
Interesting. Dharmesh, you buy that argument? Are you therefore constructive with that reason or any other reason on any of the life insurance plays?
Yeah, definitely, Niraj. I think Harsh has pointed out the near-term triggers very well, and those are likely to play out. But if you look at the valuation play, we are particularly very much interested, and we have recommended them to our clients, is the life insurance LIC of India and GICRE. So there's the valuation comfort is far more higher than the private sector players. Like if you look at LIC of India, it's trading at 1/4 of the valuation at which HDFC Life or SBI Life and the others are trading. And my own sense is going forward in say next 3 to 5 years, the way the other PSU re-rating has happened, the same is going to, that re-rating kind of a thing is going to happen here. So a lot of scope for both these companies to grow with technological adaptation as it goes through, which still is lagging as compared to the private sector players. So the premium which has been given on the valuation front to private sector players, I think that's a bit more, it has been stretched a bit. Parity will prevail, and LIC of India and GIC will also catch up. And in this market environment where you are at all-time highs with heightened valuation, there's a plenty of comfort there. Downside is definitely restricted. So it's a good portfolio buy.
Sure. And while we are talking LIC, Dharmesh, just want to try and get your perspective. Of course, you spoke about valuations. You also spoke about the possible upsides, given that some of the private life insurers are trading at higher valuations. But what's the downside risk here? Because everything that's coming out in terms of management commentary as well as largely even numbers out, except for the top line, even numbers, they look fairly positive. So what could the possible headwinds be? What could the note of caution be here?
Yeah, sure. Particularly in the insurance space, I don't see any question coming into place, especially for LIC of India or a GICRE for the general insurance space. So these two are, even from the valuation point of view, fairly balanced. Caution can come for the private sector players who are trading at a fairly high valuation multiples, and if there is some liquidity squeeze just because of some development which happens, maybe the election result don't go the way it is being expected, then there can be a correction here. Here you have plenty of elbow room and the safety net in place if you're going for the public sector place. And as I started my opening note, the only problem and the worry for this market in which we are right now is you are struggling to find negatives to discount for or to be prepared for with.
Mm-hmm. Okay, well, let's see. I mean, there is strength in the life insurers. There is weakness in some of the defense stroke shipbuilding names today, for sure. I mean, BDL is the top loser, amongst the top losers on the BSE 500. But you look at, I think, Cochin Shipyard, you look at GRE, Garden Reach Shipbuilders, all of them are looking slightly wobbly. Like I said, BDL is the top one with a really deep gash to itself relative to some of the others, and it's been this way for a better part of the trading day. So keep this in mind. What we should try and do is maybe take a quick break. We come back and viewers try and talk about some of these stocks with our experts. And a bit later on, we'll be joined by the management of Paras Defense. That stock zoomed in trade closer to the weekend. Let's try and figure out if the commentary for FY25 and it justifies that recent up move.
Welcome back. You're watching India Market Close here on NDTV Profit. We've spoken about PSUs a couple of times now, but we've not dealt with them, especially PSU Defense Pack. That one is in focus. But while we have it, let's pull up the Nifty PSU constituents as well. Try and see what's really been at the heart of the underperformance. But we're seeing that it's across the board. It's not just any specific pocket which is facing pressure. You're seeing pressure, HPCL, NHPC, SAIL, so across commodities, power, and across PSUs therefore, and defense as well, pretty much seeing some bit of pressure. Dharmesh, let me come to you on this one. Of course, we've been talking here as well that valuations in certain pockets like power look a bit stretched to a certain extent in the PSU basket. Also, the election trade or the expectation or the uncertainty with regard to elections seems to be wearing off. What's the sense currently with regard to where valuations are placed, and what's possibly caused this reaction today in your view?
See, speaking about today, or I mean going forward for next 3-4 days, I don't think any profit taking will be on account of valuations, because valuation positioning has been done with respect to 3 to 5 year kind of a perspective. This is more to do with the immediate election outcome, and unless it is comes in black and white, you do have this jitters playing out, and the traders will tend to take profit, because if you look at even last 20 days or 30 days kind of a stock price movement on the stocks which are reflected on the screen, they have been humongous. I mean, take for example railway stocks or HAL. There's been 20-30% kind of an upside. So 3-4% skimming off the profit and taking money off the table is what is happening. Volumes are definitely very low. We are not seeing much of an activity. It's like day traders and BTST kind of traders who are there for 2-3 days. They are the ones who are milking the profit right now. So it's not much of a concern. I personally won't rate this activity as a valuation concern immediately. Post-election results when they are out, then we'll see how the market shapes up, and that would be more meaningful.
Okay, and Vaishali, your opinion on this? What should a trader do? Should he stay away from this pocket, or would you wager a trade?
Well, I think it is absolutely a stock-specific market, and I would say just go very clear on the choice of stocks, and of course, disciplined trading is a must. So I am not really bothered about this event, because if you are with a longer term perspective, there are various opportunities. But I would definitely say not to go aggressive at this level, because everything is at stake. I mean, the volatility index is on a high. Some of the stocks are seeing some erosion. So absolutely stock specific, and yeah, that's how it should be.
And usually you would see that when the VIX is so high, it becomes very difficult to make money. I mean, I think stop losses get triggered at both ends as well. Option prices, of course, get determined very, very differently with volatility being how it is. So we are very close to the expiry as well, aside of the fact that there is a major reaction. And by the way, the reaction comes on Tuesday, but the partial reaction will come to the exit polls on Monday as well. Exit polls come out on Saturday. So it's a very packed next few days. Just one of those days, Vash, or one of those quarters wherein never mind what the GDP numbers might be on Friday evening, they won't make a difference, because the markets will only react to what the exit polls suggest. It's going to be a very interesting time ahead for sure. But having said that, our colleagues in the research team are busy tracking out what's happening to individual stocks. And Sumitomo Chemicals and Natco Pharma in focus. And while Sumitomo is up and active for a better part of the day, I think the stock has come off quite rapidly from the highs of the day, just about 2.5% higher. Natco has given some interesting details in the conference call as well. And that stock too has come off from the highs of the day. Varsha joins in with what happened in the reported numbers, but more importantly, did the con call, Varsha, have some details which has kind of brought the stocks down, or is it more just skimming the profits, if you will?
Yeah, Niraj, so I think that this is the part of profit booking, because if you see, so starting with Sumitomo Chemicals, where the whole show is about the margins. So revenue was up almost 3.5%, but yeah, good uptick in margin at 21% versus 13% last year, and due to which, if you see, net profit is up 52%. Now, this margin is on the back of lower raw material cost, which was 69% last year versus 59% this year. Now, there two of their raw materials have gone, the prices have gone down, which has helped in margin improvement. Now, if you see the con call highlights for the Sumitomo, so they're doing regular capex of 70 to 75 crore per annum and additional capex of 120 crore over 2 years for 5 of their products, which is going to add almost 200 to 250 crore to top line in next 2 to 3 years, and with estimated margin of 20%, which are their current margins. Then we have Natco Pharma. If you see, Revenue was up 19%. Now this was on the back of good contribution from Revlimid, which is a cancer drug, and margins were at 47% versus 38% last year. Now highlighting points here are, if you see, revenue increases just 19%, but raw material cost decreased almost 13%, and purchase of stock in trade decreased 39%. And there was also uptick in other income, which was 49 crore this year versus 29 crore last year. Now, if you see the con call highlights for the company, so they're expecting top line growth of 15 to 20% in FY25 and profit growth of 20%. Revlimid generic was also good portion for their earnings, and they've got cash of rupees 2,000 crore. Now they are expecting that they're gonna do buyback, but if a good opportunity comes for acquisition, they're gonna look for acquisition in rest of the world. Also, their tie-up with Teva, which is for Revlimid, is even post Jan 2027, where it will become commoditized market. So this is all we have on Sumitomo and Natco Pharma.
Okay, thank you so much, Varsha. Just quickly addressing 3M India's numbers, which came while Varsha was speaking. Some decentish set of numbers in terms of the overall top line. Grew just about 5%, but honestly, the real tweak is the bottom line number, up 27.5% on a year-on-year basis. And that's because margins have gotten better, 10.5% growth in terms of EBITDA. Margins have gone up by 100 bips, which is 1% absolute, from 18.5 to 19.5%. Also, the other possible trigger is the final dividend which the board has declared, 160, and a special dividend of 525. So around 700 rupees of dividend in all has been declared by the board as well. So, well, that seems to be what is aiding the stock 11% higher, Niraj, on the back of that.
Quite a stunning move, yeah. Quite a stunning move. But for a business which has actually done really well in the recent past as well,
Yes.
as in the last 3-4 years, 3M India, in line with some of the other MNCs, have had a fabulous run, Harsh.
Yes, absolutely. And that's that, at least on the bottom line, that seems to be a very strong number. 27% on bottom line is extremely strong. Let's take it to Dharmesh. Dharmesh, any views before we come and speak to you about pharma?
Unfortunately, as I don't cover 3M, so
Sure.
no views on that.
Sure. And Vaishali, on charts, anything specific you see on this one?
Well, the stock has participated very well, and I would say this is a good buying opportunity. What we are seeing at these levels, I think it's making higher bottom formations, and it's coming out of its long-term range. But well, today's move has been very, very high. So I would say a good opportunity to buy near 33,000 levels, because once this momentum sets in, I think the stock is ready for a target of 40 to 45,000 levels.
Now I'm just looking at the console numbers, and is it right that the EPS for FY24 is 517? The stock trades at 70 times, if I'm not wrong, slightly around that level. Yeah.
Yes,
so
70 times.
70 times earnings. So that's the really good part. But yeah, I think the dividend.
Yeah, but just to kind of probably just add context to that, Niraj, the stock in terms of sales growth, maybe last 5 years odd, has just done about 8 to 10% roughly. But profit growth has been strong. It's been, between that 12%, especially on a standalone basis, the numbers look much better. But on a console basis as well, it's done roughly 12 to 13% of compounded PAT growth. So slightly better in terms of, so margins, it seems, have continuously been improving, and that's possibly the reaction. But
well, actually more than that, Harsh, because the March 2021 PAT was about 220 crores. They did 607 crores in 23. And I think this year they've probably clocked 740 or 50 crores. So in some sense, from 220 to whatever 750 odd is a fairly strong PAT clip for sure.
Yes, absolutely, and that's probably the leverage play that's playing out, and maybe that's why that play on the stock. Just the bottom line growth number is so strong, despite a 5%-ish top line, that it's probably leading the stock higher. Anyway, let's slip into a very short break. On the other side, of course, we'll take top buy-sell recommendations, and we'll have the management of Paras Defense to speak to us right on the other side of this very short break. Stay tuned.
All right, back with India market close right here on NDTV Profit, and trying to figure out some internals of the numbers of Paras Defense. The stock is flattish, or rather maybe down a couple of percentage points. Yes, indeed, 1.73%. The numbers came out with weekend. And Amit Mahajan, Director of Technical and R&D, Paras Defense and Space Technologies, joins us on the show. Amit, good having you. Thanks for joining in. Good afternoon. And while it's been a year which has been, well, from the promise that you give, maybe a bit flattish, 10% growth, it's quarter four which is intriguing, because you've shown, let's say, growth to an extent on the top line. Not that great, but there. But the margin squeeze has been very, very sharp. Now, what's led to this, Amit?
Firstly, good afternoon, and thank you for your analysis is absolutely correct. All the reasons for this, I would like to mention it very starkly, is all positive reasons. Why? One is the defense engineering, if you see, has outperformed themselves. There are two verticals: optics, optronic systems, and defense engineering. So defense engineering has taken 73% on our revenues, wherein optics and optronic systems have gone down to 23%. The primary reason for this is one particular product, which is a very high value product, which was supposed to go in Q4, will now go in Q1 of this year. Now, this shift has hampered the revenue, the total revenue, also the revenue percentages, and also profitability, because that is optics and optronic systems contribute largely to my firm. So there is the reason why I say it's positive, because if you ask me, defense engineering team, they are rejoicing because they have outperformed. They've done much better than the last year. The second reason for slightly lower profitability is because there are two. One is we have augmented our employees. The employee cost would have gone 30% higher than that you can see in the balance sheet. The second is the anti-drone systems subsidiary of ours. We've invested heavily in the R&D part. They're coming out with some wonderful products. All of the revenues we'll be able to see in the coming year onwards. But till last year, all that we've invested just is like a loss, and those loss gets carry forward to the parent company, and hence in console you will see a lot of loss effect of the subsidiaries where the expense is happening on the R&D, but the revenues aren't being done. So I consider all of this as positive effect. You will be able to see the positive effect and the positive results in the coming days.
Amit, okay, and thanks for that clarification. Just some questions out there. This is Niraj here, of course, with me, my colleague Harsh. But when I look at what you've done, not just in Q4, so first question, are you saying that because this didn't get executed in Q4 but will get executed in Q1, operational metrics or margins could revert to much higher numbers than the 20% for the quarter? Part two of my question is that when I look at the last 2 or 3 years, right, your operational margins have dipped from circa 30 odd to circa 20 odd. Do you envisage margins going back to those levels, or that may not be the case?
Okay, so the dip has only been in the last year. If you see the last couple of years, we've kind of sustained our margins. I would also want to mention that the sustenance of margin also, if you ask me, is on the conservative side. Leave aside the dip. The dip is not envisaged at all. But the events, like I told you, they affect the margins. When I'm saying this, in the coming year, I will not only sustain the old margins, but I might slightly do better.
You mean 30 odd % level, ballpark?
Between 28 to 30%.
Between 28 to 30%. Okay, and you believe that for the year at large, you could be between 28 to 30%? Starting from Q1?
Do not look at us as quarter company.
Got it. Yeah, of course. But I'm just trying to understand.
Very good. Q1 looks very, very good. But I don't know how the remaining 3 quarters
Got it.
are.
Okay. But on an average, you say between 28 to 30%. Okay.
All right. Okay, so Amit, could you just give us a perspective on optics versus defense? What are the margins like for each of those?
Defense trades at a margin of 20%, 15-20%, and optics trades at a margin of 30+%.
Understood. And with this new vertical of, and possibly it's part of defense itself, drone, what kind of margins and what kind of contribution will it have to revenue going forward?
So the drone and the anti-drone, these are 2 subsidiaries of the company, and they independently operate. The drone market, yes, is having a good set of margins somewhere between the optics and the electronics vertical. The anti-drone system, when it starts kicking up, it will come closer to the optics margins because they are highly value-added, quite complex products, but very good margins.
Okay, and what's the visibility like going forward in terms of opportunities and order wins and the book that you currently have, just in terms of size?
So if you look at, Paras has been blessed with the solid order book, and the smiles on my face, and I want people to draw positivity out of this, is the company has strong order book, has a funnel which is in excess of 2,000 crores. And when I'm saying strong order book, it is in excess of 600 crores already. I'm not even counting the orders which are L1 and they are in the pipeline, they are yet to come. I'm not even talking about that. So the business front is very, very strong. Yes, we are going from component business to a product business. This leads to a higher value per product. And if that product, for some reason, which is not within the control of us or our customers, some third party reasons, this can just, they don't know what a quarter means, right? So this can go from Q4 to Q1, and that can have this effect. we need to wait till it settles down. But the coming year looks good.
Understood. So let's look at it annually. What's the kind of compounded growth you're looking at? Because you've got such good visibility in terms of the order book. What's the growth like in terms of compounded growth over the next 1 to 2 years that one can expect?
I am going to be very, very conservative because I have not done what I should have been doing for the last 2 years, right? So I will still maintain 20 to 30% as growth. Even if I say 30%, it's still going to be conservative. So 20 to 30% is the growth that I want to give a guidance of. But picture abhi baki hai mere dost.
Understood. And optics versus defense, what's the mix like in terms of order book mix? If you can quickly.
Order book is 50-50.
Understood.
And
understood.
Yes, orders are yet to come in, which we expect to come anytime in this financial year. So the order book shall go slightly inclined towards optics as the year progresses.
Okay. So,
Amit, one final question from my end. What else is happening? Because you've spoken about anti-drone and drone systems for the last 12-18 months. They have now come to fruition. What else is in the offing? Something that you can disclose which could be a big part of what Paras will do over the next 18 to 24 months?
I wouldn't say 18 to 24 months. Yes, we've brewed the coffee long enough for it to now, it's the time for us to sip. But if you take me beyond, say, 36 months, if you look at the Quantico Technologies, a subsidiary, 100% owned subsidiary of Paras, which we have formed recently, if you look at that, then quantum communication is one area that Paras will be entering to in the near future. That is going to take Paras Defense over and beyond that we have ever thought ourselves to be. So this is going to be the game changer for the company. Along with that, the JV that we have with Contro, which is a EOIR, world's #1 EOIR company, this will start making good inroads into the Indian business. In the coming future, you will be able to notice that this particular JV will bag some real nice good orders. And obviously, a large sum of that business will be flowed back to Paras Defense because Paras Defense will contribute to the indigenous content of whatever Contro Paras does. So it's a good amount of mix that we are looking at, and this will propel the company into a solid EOIR company, one, and second, it will also propel us into quantum communication domain where you won't find many people around the globe.
Well, we wish you all the best for that, all the process per se, and maybe in a couple of years' time, we'll be able to maybe talk about numbers too. Who knows? You said 36 months. Let's hope it's sooner. Thanks a lot, Amit, for joining in today and giving us the perspective.
My pleasure.
That's Amit Mahajan of Paras Defense. Hopeful of some newer things coming in. But for now, certainly the margins have gotten squeezed quite considerably on the reported numbers. The management is saying things could improve in Q1 itself. Dharmesh, we looked at Paras Defense. Did you hear the conversation? A big spike last week, Friday, but the numbers left a bit to be desired.
Yeah, definitely. I mean, let them deliver first because the valuations are sky high. They still have a ROE of 6-7% only. And margins last quarter was not that great. So let's wait. And this transition is very difficult. Component was what they were doing, and they are transitioning into a product division. So the order inflows after the product testing, everything is rolled out. How much orders they are going to get for their product has to be seen. So that proof of pudding is still pending. I would give it a pass. I mean, we have seen this company for many years. So let them deliver first.
Okay, Dharmesh, take your point. Niraj, just in terms of valuations, this one's trading at, in terms of price to book, nearly 25 to 30 times price to book, maybe 12, 13 times price to sales, and 100 plus times in terms of price to earnings. Just the sense that how much of the future growth of 25 to 30% is priced in is essentially the question here.
There's significant promise here for a while now. Somehow the numbers haven't gotten delivered. Let's see if these valuation multiples last, Harsh. That's the other point. Maybe Q1 numbers, and if they shore up the margins, could be the trick, if you will.
Okay, very interesting. Vaishali, we'll shift over from fundamentals to charts. How does the chart structure look to you?
So I'll tell you, I mean, in fact, it is quite contrarian to what you guys are saying. I would say actually the stock is showing a lot of strength. And why so? Because even on the weekly chart, after a very long time, this has been a laggard in the whole defense sector. But from what we've been witnessing since last 2-3 days, it has given a weekly breakout. So about 840. In fact, this has changed the scenario of a sideways stock into a promising stock. So, well, if we sustain about 840 levels, I think it is quite likely that in times to come, we can see retest the previous highs of 1100, 1200.
Okay, so that's the one which is on charts as well. But the other theme that's really playing out, and if we can pull that up as well, the Nifty PSU Bank, if we can, maybe one of the top sectoral losers in trade today. Let's try and break down probably what's happening there. Dharmesh, your views with regard to PSU banking counters facing some amount of pressure alongside the larger PSU basket. We didn't speak about PSU banks in particular, but your views on this piece?
Yeah, definitely looks attractive. And if there is a meaningful correction coming on the way, so it should be an opportunity to lap onto the PSU banking space, particularly SBI. Because my own sense is going forward, it is the CD ratio which will play the trick. The companies and the banks which are having a better CD ratio will have a better opportunity to cater to the growth which is coming the way. And there SBI stands tall. I mean, at 81% CD ratio is better than most of the private sector counterparts like ICICI Bank and all, which are 85% plus. And valuation wise is still trading at around 40% lower valuation multiple compared to ICICI Bank, which is SBI is 3 times the size of that. And now the asset quality is also not a concern. It's only a point less than 0.5% is the net NPA, and the profit CAGR has been 18% for the last 10 years. So I think all the tick boxes are in place. The only concern was the asset quality and the quality of lending they were doing. That has also been taken care of. So in this market environment, I think re-rating has already started for most of the public sector banks to catch up with private sector place. And SBI there remains a top pick, followed by Bank of Baroda.
Understood, but those are some of the larger ones, Dharmesh. Any quick view on the smaller ones, relatively smaller sized PSU banks, which have really, given 3, 4, 5x in terms of returns? Something like a Bank of Maharashtra, something like a Punjab and Sindh Bank.
Harsh, you nailed it. I mean, they have already given 3, 4x kind of a return. And valuation wise, there is no comfort out there, and they don't have the elbow room to cater to upcoming growth opportunity. So it will be larger place now going forward for next 1 year, where you will see especially in the banking space, where you will see the comfort and the 18 to 17% kind of AUM CAGR growth, that is the disbursement growth coming into play. So that's the reason why we are avoiding smaller PSU names. And the same is the case with the private sector player as well. We are not focusing on smaller private sector banking play. It's only the large caps where the focus is.
Vaishali, your quick views, if at all, on this particular pocket?
Sorry, which one are you talking about?
The PSU banking space overall, anything that you like, and your views with regard to charts?
So I would say that yes, SBI is the front runner and the favorite one. But besides that, we may see, because, well, Nifty comparatively, like Bank Nifty is outperforming, and I'm looking at the PSU Nifty sector also. There isn't much really to talk about, in the sense it's still holding on pretty well. And this was just one of the days that we are seeing some selling pressure coming in, but yet there is no damage to the trend. So my view for PSU banks also continues to stay bullish.
Okay, well, that's on PSU banks. Now on to some other stuff. A clutch of block deals have happened today, or bulk deals, or what have you. 3 or 4, if I'm not wrong. Inox Wind and Concord are certainly in focus on back of these. The stocks are trading under some serious pressure, particularly Inox Wind. Mihika Johnson with the key details. Mihika.
So I'll start off with Inox Wind now. It hit a lower circuit at 10% at the start of day. Now volumes over 44 times its 30-day average, and the total traded volume according to NSE was 9.05 crore shares. Now why the higher volumes? Well, 6.03 crore shares, or roughly 6% of the company, changed hands in 2 trades, and the average price was at 150 rupees per share. However, the buyers and sellers are unknown currently. Now, but we did have earlier media reports state that the promoter of Inox Wind, which is Inox Wind Energy, was planning to offload up to 5% stake in the company. And Inox Wind Energy holds around 38.43% stake in Inox Wind. And just for a little reference, while total outstanding shares before stood at 32.59 crores, after the 3:1 bonus issue, the total outstanding shares now stand at 97.78 crores. Next up, we have Concord Biotech. Now it hit an intraday low, of 6%, and volumes were over 83 times its 30-day average. It was our top volume buzzer for the day, and the total traded volumes were 48.61 lakh shares. Now multiple large trades took place, around 35.7 lakhs, or roughly 2.4% stakes changed hands. And we did have earlier Bloomberg reports stating that the company holder was seeking $56 million via a share sale at a floor price set at 1,320 rupees per share.
Okay, well, it's interesting, Mika, of course, thanks for this. Dharmesh, I want to take Inox Wind as a case in point here. It's interesting that the company speaks about fairly strong guidance ahead, cash flows, order book, etc. And this share sale continues in some sense. I mean, this negative reaction is testimony to the fact that the market has not liked the share sale from the parent.
Yeah, definitely, yes. I mean, both are very contradictory. As a promoter, if you are, sending a message to the world that things are getting into place and the strong trajectory is ahead, then you should be the first one not to sell the stocks. So it's definitely, and the numbers have to play out, because Inox Wind has its own history. So they are yet to be delivered. And in this stock price run-up, if promoter is exiting, is definitely not a good sign.
And maybe which is why, why the stake sale when there is cash flow visibility is a question that he'll be asked over and over. We've reached out to them, and hopefully when they talk to us, we'll try and ask him the same question, because this isn't quite okay, especially after the kind of bullish commentary that the management has given. So certainly want to watch out for. What about Concord, Dharmesh? Concord Biotech.
Yeah, we have not covered that. So
okay.
Difficult for me to cover.
Difficult. Okay.
Apologies for such.
No, completely fine. But recent charts out there, Vaishali. But anything on Concord? Inox Wind is on a lower circuit, so I don't know if you can give us some chart view there. But Concord Bio, if both,
well,
then
of
both.
Course,
yeah.
I can give you a view on both. So Inox Wind, of course, it's a gap down opening, and so that calls for something to worry about. But still, let's not lose hope. Unless and until 135, 138 levels are held on, we may just say it's a sideways or a nominal profit booking. But if 135 levels break, then I think it's calling for trouble, and that could go to a further downslide of around 100 levels. And the other one you're talking about is Concord. Well, overall, the trend is pretty much strong, but it's just that since market being so volatile, we are seeing some consolidation. So if 1070 on a technical parameter breaks, then I think it calls for a further profit booking. Till then, it's a wait and watch.
Okay, thanks for that, Vaishali. Let me take it back, Dharmesh. Divis Lab, second consecutive day of gains. The street clearly cheering some of the pharma names as well as numbers as well as commentary. But Divis, in terms of valuations, trades at maybe 50 times forward earnings. You think that's steep? Just your quick view, and what do you make of the current price as well as what are the downside risks in your view?
See, that has been the short story for most of the pharma companies. The valuations have actually risen very high after the run-up which we have seen in the last 6-7 months. And if you look at the pharma basket as a whole, we were going through 10-15 companies out there. So top line growth has been missing. It's around 10-11%. The story has been about the operating profit margin. And largely it has become more of a commodity play, pharma space as a whole. There are no blockbuster launches these days, and They are more of a generic plays, API and specialty plays. So there, because of the 200, 250 basis point kind of an average operating margin improvement, the profitability has come good. But I think this is the best of the earnings they have seen. Going forward, there is going to be a squeeze on those margins, and it will be difficult for pharma companies. In the present context, as of now, some defensive shifting of portfolios is taking place, and because of that, some price action is there. That is all. We are not recommending any pharma stock for a portfolio buy or from a medium-term perspective presently.
Okay, so that's the one on Deves. Vaishali, the top sectoral loser today by a mile is the Nifty Realty. Talk to us about your views. What's happening there? What should one do if one's holding positions?
So actually, I would say one should book profit because anyways, these are all high beta stocks. And right now, as I've been telling you since the beginning of the show, that 22,900 is the decisive factor. We are right now quite below that. And if we sustain over here, then of course it calls for some more profit booking. And that would drag Nifty towards 22,700, 22,400. So if that is so, then well, I think DLF, etc. should see a lot of profit booking coming in these stocks too. So though lower long-term trend is pretty much intact, we still have, if you see the past data, we still have scope for higher targets. But for the near term, I think profit booking can come. So partial profit booking should be observed.
Okay. And Vaishali, your BTST, STBT ideas?
Well, so I continue to stay bullish on the insurance stocks, that is SBI Life and HDFC Life. And also, I do like Aarti Industries. So that is one stock which has shown good strength. So Aarti Industries is the other stock that I would be looking at.
Okay, Dharmesh, let me quickly ask you on your ideas as well. It's that time where we're a week away from election results. What could be a good play at this point? One from an election perspective, but also from a longer term perspective, fundamentally in terms of value.
I think most of the stories have already played out. The sector remains the same. That's the defense, railway infra, power, and some of the utility counters. So that has played out. Metals have also playing out. And metal is one sector which we are still bullish on. I think there's still scope of around 20-30% kind of an upside on stock price levels, seeing the way the international market is behaving. China is picking up, so commodity prices are going to go up. And there, I think JSW Steel and Hindalco stands a good chance. So be prepared for the volatility, be a brave. And if you are okay with that, then I think this is a space where one can look into. And the other we spoke about, that is LIC of India and GIC. These are insurance plays from the public sector space are looking good, where margin of safety net is high.
Okay, and clearly liking insurance both from a technical and fundamental perspective today, both of our guests. But Vaishali, let me come to you last off with regard to the pharma pack. Overall, how's the pharma pack looking? Are there any trade-worthy ideas in your mind within that pack?
So, well, Nifty Pharma sector on the whole, it is at its resistance level, but overall it is still showing a lot of strength. So I think all chances there could be a breakout once we see some stability in the market. So having said that, we have seen good run-up coming in Divi's lab. I'm also looking at Biocon, of course. Biocon is doing well. And the other stock to my liking right now is Dr. Reddy. Morning, we saw some momentum, but it's still holding on. So my focus will be now from here on Dr. Reddy also.
Okay. Well, thank you both of you for joining in today and giving us your thoughts and your insights. Really appreciate your time this afternoon. About a minute and a half left before we shut shop. So let's just quickly wrap up the markets for you. And it's not been a pretty day, if you will. But in fact, at third of a percent, we are closing in at the lowest point of the day for the Nifty. So that's to be borne in mind. The mid cap and the small cap indices will come up on your screen. And I wonder if they have succumbed to further selling. Yes, they have. We're closing almost at the lowest point of the day for both the mid caps and the small cap indices as well. So it's not turned out to be a great day of trade. Just the fact that volatility is crept up in the session today for sure. VIX is higher, and that clearly is a problem. But no reasons for believing that this will be a sustained fall. I really doubt that too many people will take very large positions either direction a day or a week ahead of the numbers. Really, we've had a good rally. There's a bit of a pullback that's happening. I think it's acceptable. Let's get the heat map up on the screen as the market shut shop. I think we'll do that any second, but just the heat map, and you can see, I mean, maybe slight more red, but it's almost even Stevens between the red and the green, and a bit of a defensive bent, if you will, because pharmaceuticals, life insurance, steadiness, Grasim, even IT like Wipro are the ones which have gotten some bit of flows today, whereas the ones which have gained the most and economy-facing names have certainly pulled back. In fact, if you look at, save for Tech Mahindra and maybe to an extent Bharti Airtel, all the others are rank economy-facing stocks. Adani Ports, Power Grid, BPCL, Coal India, Enterprises, NTPC. That is sure shot economy-facing pack, which has taken a bit of a hit in the session today. So not a very large damage done, but not a pretty close either, because it's been a close at the lowest point of the day today, which is not the best feeling, Harsh.
Yeah, absolutely. Let's pull up the advanced decline as well and see the breadth. The breadth is surely weak, as you can see, second consecutive day where we've seen a weakish breadth. Today weaker than yesterday, in fact. And let's pull up the small and mid caps as well, the small and mid cap indices, the benchmarks. There you go, 1% lower on the mid cap. The small cap is where the pain is even more accentuated, around 1.1% thereabouts. And let's also try and focus in on sectors a bit, because it's sector agnostic today, Niraj. Except for pharma, maybe a bit of a defensive play. Outside of that, media was flat, but across the board, but in specific pockets, the PSU pocket clearly has seen a bit of a pounding today, and the realty pocket, which has seen some pressure. The metal pocket also a little bit, energy and metals. But let's focus in on some names. GlaxoSmithKline, let's see where that one's closed. So GSK Pharma down roughly 4%, up 4% on a bad day of trade. So part of the pharma pack doing very, very well. 3M India, very strong numbers. Let's see where that one has settled in at. Very strong profit numbers, I correct myself, 10% higher on that one. And Coromandel has also closed roughly 4% higher, if I've got my, yes, absolutely, 4% higher. There you go, Coromandel. In terms of the ones under pressure, there you go, Hudson Agro as well. But LG Equipment, that's one under pressure. The entire defense pack was under pressure, including Bharat Dynamics, rather led by Bharat Dynamics today. And you had Hudco, Borosil Renewables, all of which were also under pressure. Borosil's numbers also in focus this week. IOB also, and along with it, a clutch of PSU banking names were also under pressure. Some names which have done well, Timken, there was a block trade there.
In fact, even on PB Fintech, the block really, 1.2% block leading to the fall.
Yes, PB Fintech also had a block, 4.6% fall there. But Timken on the positive side with regard to block. And that kind of sums it up, at least this one, the BSE 500.
Yeah, interesting day of trade. Let's see what tomorrow has in store. 4 days before the election verdict is out, 3 days after which we'll see the exit polls. Promises to be an exciting next 3 days. Thanks so much for tuning into this show. Keep on tuning in, and of course, stay tuned to NDTV Profit for more news and updates post-market hours as well.